Trading after price has hit an all-time high can be very confusing if you're new, most especially if you've never had the experience to trade that. In this video, I'm going to share with you an example of trades that I got into. Now, the first thing I did was to derive my key level being this weekly inefficiency. The next second thing was to wait for a 1 hour significant break of structure. And as you can see that right here, this high got broken. Then after that break, right here was my first entry. And after the first entry, the next thing I did was to anticipate for a significant 1 hour break. And right here, you can see a high, a low. And then the moment we broke this high, this is an intrastructural high, right? Now, after breaking this high within the structural high and low, what I did was to derive the last move to the downside, which is this candle before an expansion. This was the candle, took liquidity, and then broke that 1 hour high. That's why it's my point of interest. And now I was anticipating for price to come back into that position and then wait for a 5 minutes break of structure. And now another thing I did was to derive my draw on liquidity, because understanding the draw on liquidity helps you to know where you're going to put your targets. And right here, we have a low resistance liquidity. If you haven't watch my video where I talked about high resistance and low resistance liquidity, just do make sure you watch that. It's going to help you a lot. And right there, it's my drawn liquidity. The moment price came into this position, I scaled down to the 5 minutes time frame, looking for a 5 minutes break of structure. Now we'll go to the 5 minutes time frame. And right here, you can see very clearly price created a high, created a low, and then we broke structure right here. This was the break and close. I always want to see a close above the structure. And right here, after we broke structure, close below it, because this was really early in the morning. It wasn't even London session, so I couldn't get in because I like to get in within the London kill zone. So what I did was I outlined, this happened around 6 a.m. London time. And right here, this was the last down close candle before an expansion that broke structure. So the bodies of the candle is usually my entry. So what I did was I outlined this key level. And then before even London opened, I already saw price came in. And then around 7 a.m. price went to the downside, took this liquidity, but I still maintained my position. I didn't change where I was going to get into the market. All I did was wait for 8 o'clock, London open, and then I still put my entry position, still the same key level, using the same key level, this low as my stop loss. And then price came in there, mitigated it. And the next thing I saw was an expansion straight to my take profit position, being the draw on liquidity, being the low resistance key level. Price went straight to the take profit, smashed it, 1:5 risk to reward ratio.